Hi, my name is Paul Grant. I am the owner, founder of Planning with Purpose. And July 1st, 2025, Washington State has implemented a new estate tax law. And I wanted to go over some of those things. First, I will start with the federal estate tax and where that is at, as that constantly changes. So as you can see here by the slide, the federal estate tax is currently at $13.99 million. We'll call it $14 million as a general number. So what that means is that any individual who passes away can exempt $14 million from estate taxes. The first $14 million exempt from taxes. We like tax exempt money. And then anything over that is taxed and exposed at currently 39.5% by the federal government. If you are married with proper planning, then you can double that exemption, so almost $28 million for a married couple, but the planning has to be done properly in order to achieve that goal. So the federal estate tax stays rather high. It is supposed to end in 2025, but with the current administration, it is already in the proposed budgets to maintain the estate tax threshold and continue to have it to go up by the rate of inflation. So therefore, the federal estate tax, even though the tax is rather substantial, most individuals will not be exposed to it. Also, individuals often ask about the annual gifting tax. So what that means is that is raised to $19,000 per person. You can give anybody $19,000 and you do not have to tell the IRS about it. If you give more than $19,000 to anyone in a given year, then you are technically supposed to file a gift tax return at the with your 1040. Your CPA would be able to assist you with that. If you're married, again, you can give someone then $38,000 twice, right? Each of you get $19,000. And so you can give 38 to one individual as a married couple. It's called gift splitting. So there is a brief federal estate tax update. So moving to the state, Washington State estate tax. You see by the header it is finally moving. So what that means is over the past, I think 7 years or more, the Washington State estate tax has been frozen at $2,193,000. It was a ridiculous little section of the law to where they could not apply the rate of inflation because they changed what cities the rate of inflation was to be calculated by. However, Washington State, beginning July 1st, has now implemented a new law, and there are two components to it. So first of all, number one, the exemption amount is going to be raised from that $2,193,000 up to $3 million. So that's really good news. Again, we like tax exempt money. So each individual now receives $3 million of exempt estate. So the first $3 million exempt from taxes. Anything after $3 million is then exposed or can be taxed by Washington State. Again, with proper planning, and if you're my client already, that has been done for you. Married couples get 2 exemptions, $3 million per person. So, good news, many clients are now out of the estate tax exposure realm, and we all get a little more breathing space in Washington State with the raised exemption amount. Unfortunately, what Washington State did as they raised the exemption is they also raised the tax brackets. So instead of someplace between 10 and 21, it is now between 17 and 35. So if you have money that is going to be exposed to the Washington state estate tax, it is now at 35%. Now that's if you have 9 million or more. So it's still a laddered approach to get to that threshold. But if you have more than 3 million, or again with proper planning 6 million, then you're going to be exposed at 3 million or 6 million to a 17% tax. That's higher than what used to be at 15. So the old law, a little over 2 million exempted. The new law, 3 million. The old law started at 15%. The new law at 17%. The old law capped out at 21%. The new law, 35%. So they raised the threshold of exempt money, but they also raised the tax brackets. So it's going to bite a little bit more. I want to give you a couple examples then of what it means to have a taxable estate in Washington state. The previous rule with a $10 million estate. Now the $10 million is about the break-even point on all the different calculations that I've done. So if you are under $10 million, whether married or single, the ultimate tax is going to be very similar. But if you have 10 million or more, the new law then begins to bite you. So let's take a look at it. If you were married under the old law, if you had $10 million and you're married, because with proper planning you get 2 exemptions, then the tax would have been $840,000. If you were single, $1.25 million. So that would have been the tax your estate would have paid to Washington state under the old system. Under the new law, higher tax brackets, but also a higher exemption. Married, you have just a little bit of a break. You're right at $800,000. So that's about a $50,000 difference. Married's just a tick up by that $50,000, so 1.3. So at that $10 million range, estates are really similarly situated. New law versus old law, not a lot of movement right there. If you have less than that, then the additional exemption usually will help you a little bit, even though the tax rates have gone up. All right, let's take a look at a $15 million estate. So if you have $15 million and you are married, previously you would have paid $1.8 million, approximately 12% of your estate, to Washington, and this is with no additional tax planning. If you were single under the old law, $2.2 million, equating to about 15% of your estate. Under the new law, with the higher exemption and the higher tax rates, because now at 15 million, whether you're single or whether you're married, everything is exposed to 35%. So therefore, the numbers begin to escalate. If you have $15 million, the new law, married's $2.2 million of a tax bite. If you have $15 million and are single, the check that your estate is going to be writing is almost $3 million, about 20% of your estate. Here is a $20 million estate. And the $20 million estate under the old law, married couples, $2.8 million, singles, $3.25. Under the new law, $4 million for a married couple, approximately 20% of your estate. $4.7 million is your tax hit at almost 25% of your estate. So as you can see, the Washington state new tax law actually helps a large number of individuals. It takes them out of having a taxable estate, However, if you do have a taxable estate, specifically if you have $10 million or more, then the tax hit is going to become increasingly burdensome, and it's going to take a bigger and bigger bite. Don't worry, there are solutions. This is what I do all the time. We have opportunities to sit down, talk about what it means to your specific estate. And actually, the sooner you do advanced tax planning, so in other words, you have a taxable estate, so we have to do additional planning for that to save or mitigate that estate tax. That way, your family enjoys more, charities enjoy more, those you care about get more of what you have been given and what you care take over. So there are options, but we would need to get together. The bad news is that that's a little more expensive work, as you might imagine. We are trying to shift tax burdens away from you and your estate and preserve it for your family. So maybe the moral of this whole video is to give you some good information, but also it may be time to start making an appointment. How can we resolve this tax issue that you have? And how can we do it on a permanent basis? The sooner you do advanced tax planning, the better for your estate. The longer you wait and the more your wealth builds, the harder and harder it gets. And so therefore, if you are at the 7 million, 8 million, even though you're not at that 10 yet, chances are, pending your age, how you're using your finances, you'll be there sooner than you think. It is better to do it now than it is to do it later. So there is our Washington State estate tax update. I hope this was useful to you. Give us a call if you have any questions or if you'd like to sit down and meet with me. Thanks for watching.